Hi, everybody. Thanks for joining us today. As Tallulah had mentioned, one of the things we've been doing behind the scenes is really digging deep to identify some insights on how the recruitment and TA space is really reflected from all of the impacts that have been happening across various industries. And so we wanted to sort of dive into each of those various metrics and see kind of how the patterns are emerging as this continues to unfold. So hopefully you can walk away with a couple of tidbits like I sort of fit into this category and that seems right for my business and so forth, really to help set the stage for the recommendations around those core 5 categories we want to talk about. So probably we'll start with, not surprising to most of us here, is that clearly hiring has slowed, as Tallulah had mentioned. Unprecedented unemployment has taken shape based off of the impact of everything that's gone on. We chose to look at the data across a multitude of spectrums, really with February kind of being our normalized baseline. So we were aware that COVID was there. We weren't aware of the impact, scope, and magnitude at that point. And so we're going to compare the data and the trends that we've seen across industries, sectors, and so forth, really from February onwards. So if we think of February as being sort of a normal state, probably, again, not surprising, hiring takes a steep decline really in March. It's the first moment in the data that we understood based off of all the jobs that had been distributed from our platforms, about an 18% reduction almost immediately. That was sort of the first wave that we noticed that hiring had slowed. People had absorbed the initial wave of the impact. But again, as we know now with hindsight, it's continued to be dynamic. It's continued to fluctuate by industry, region, and even job type. So what we've learned is that it took the initial hit in March, it took another hit in April, and maybe some good some news out of this slide at a high level is that we're starting to see an uptick once again in May. So after we've gone through the first couple of waves of what this is looking like as news continues to unfold in terms of thawing out of certain regions, industries, and so forth, we're starting to see a slow uptick. And this data takes us through May 11th. It's looking early on that it's even higher than 69%, even in today on May 20th. So job count has slowed. It's stabilized now based off of our data and is slowly starting to uptick quite a bit. Again, ubiquitous to all industries. But if we then dove into industries, again, probably some of this surprising, probably some of it not, but there's some interesting things to look at. If we looked at this as far as the most highly impacted industries, hospitality from our data took the widest hit across the board and continues to show a pattern of decline. So if you notice in February to March, hospitality, which includes anything from hotels, tour operators, and the like, takes a dramatic hit, in part because air travel, both for consumer as well as business, takes a steep decline. The CDC orders things like do not sail orders for cruise ships, which is a strong part of this economy. Hotel occupancy is significantly down, and of course, even conferences and so forth take a dramatic hit as large gatherings are discouraged or prohibited. So they've shown a pretty continuous decline and continue to look that way in May. If you look at other particular sectors, like we'll look at automotive, for example, they took a strong hit as well, but they're actually showing some uptick in May, which are early signs that some folks who may have put that purchase of a car on hold because maybe they don't need that second or replacement car, they're working from home, they don't need it, or they're being a little bit more cautious about their bank account. They're not wanting to take on such a large expense. We're actually starting to see that thaw out a little bit. We're also seeing a small uptick in some rental car business and so forth. So that industry is at least showing some measure of correction going forward. On business services, as you can imagine, you're a company and you're unclear what the impact's going to be. You're less likely to continue purchasing consulting and business services. But it shows that it's leveled out pretty nicely in April and into May as well. We'll continue to monitor that really closely. And then lastly, the construction sector, housing, real estate, and so forth. What we noticed there is for those companies who are under a corporate lease with their business, may have asked for suspensions or delays of payments and so forth. So again, focused on that bottom line. Obviously took a pretty significant hit from a hiring perspective, but we're slowly starting to see that thaw just slightly, in part because of the retail customers we're seeing who are emerging, opening up, and able to continue to make payments on those things. Healthcare was one that is one of our larger sectors, at least in our business, and obviously a pretty diverse area, which can include anything from regional hospitals, large nationwide hospital systems, and even senior living and so forth. What we were surprised by is the hit that it's taken overall as an entity, but there's some diving in to do here. So if you look at senior living, as you can imagine, the older population being a little bit more susceptible and vulnerable there and needing more additional services, they take the least hit within the healthcare sector compared to some of the others. But it's really those hospital chains, nationwide and even regional, who depended on anything from elective surgeries and so forth to help bring those income streams in, have seen a strong curtailment as a result of Corona, where they are having to divert resources to other more immediate needs, seeing that business decline. We're also noticing that even in that sector, a lot of the healthcare companies that we work with are diverting resources, cross-training folks into other disciplines, really to help stem the tide of the needs that are there based off of how the coronavirus has unfolded. Not all of it's necessarily bad. There's sort of a mixed bag of industries who have actually seen hits, but are starting to see some unthawing as well. If you looked at retail, as you can imagine, took a pretty significant hit, in particular for at least the customers we work with that did not have a strong e-commerce sort of posture in the market. They saw obviously a steeper decline. Their stores were closed and so forth. We're starting to see that slowly pick up a little bit, as you can imagine in the news, hearing things around curbside pickups being acceptable in certain locations and so forth. So we're starting to see that. And in fact, I read a recent Wall Street Journal article talking about the pent-up demand for retail apparel in particular is starting to emerge, particularly because people are needing a new wardrobe. They're tired of working from home in their t-shirt and shorts, and they're finding themselves having an appetite for that. So they're starting to see some of that affect that as well, which is good. Real quickly on government, not surprising to many, I think, but once this thing hit, they put a lot of pressure on federal, state, local entities to offer additional services or build up staff to support what was an unknown quantity to them, whether it be how many staff members do I need to help process unemployment and the like. So they took actually an increase in March, and then you started to notice the level out of demand really in April and May as we began to understand exactly what we would need from our governmental partners and so forth. Telecom doesn't really get affected really as much as others, given the need for internet, strong internet to work from home and or streaming services and so forth. And then lastly, if recruitment can be thought of as perhaps maybe partly a leading indicator of things to come, of all the recruitment partners that we work with, we're starting to see some reemergence, some increase in overall job distribution and the like as a result of some companies who are in a surging posture that we'll talk about in a moment, or in fact have had a strong need to hire very quickly, relying on those recruitment partners to help them attract and gather those candidates to hire those roles in mass. And then just last but not least on the trends that we're seeing, if we think about job counts on the decline, obviously there's a direct correlation to the amount of social campaigns that people are putting forth, either to amplify specific jobs they're trying to hire, or in fact, even just amplifying their employer brand that Jason talked about briefly previous to this. So you'll notice that there's kind of a correlation effect of the number of campaigns that are going out. Two things that we took from this. First of all, the campaign levels have leveled out in part because folks are understanding that even if they don't have a lot of jobs, they need to continue a conversation with their customers. They need to retain that relationship that they've taken a long time to build through social. And so maintaining some level of continuity on that messaging, whether it's not job specific, but it's why it's so important to work here or what we're doing to help our communities and so forth in COVID, we've seen a sort of a leveling out of that. But even more important to that, the other part that we found interesting is that Facebook was always a very important social network for all of our partners. It actually shows to have become that much more important than it was in the past. And in pulling some of our customers, we came to learn that they understand a lot more people are on Facebook than had been the case before, either in frequency or in sort of consistency, but they're also spending more time there, they're engaging more content. So we're seeing a lot of folks increase the amount of time they're investing in Facebook, both from a messaging and posting perspective, which was not something we expected, but makes a lot of sense, especially as we talk to a lot of those customers. And then last but not least, again, on the campaign trend, if you thought about more folks who are either uncertain about their current position at a current company, or they've just been recently furloughed or laid off, as we would expect, they're absolutely spending more time on social. But more important than what we're seeing in the data is they're actually doing more in social specific to the posts that are coming into their feeds, either, again, from a branding perspective or a job posting perspective. And we look at that from an apply clicks perspective. They're actually looking at a post that's being broadcast out to social and taking actual application action on it. And you can see, especially in construction, again, compared to February, it's a 3 times increase in the amount of candidate actions on particular posts from our customers. Food and beverage, 200%, healthcare, 200%. Really what this is, I think, telling us, and maybe a good story for you to think about, is the intent behind candidates being on social is stronger than ever. They are investing a lot more time and doing a lot more engagements with these posts because they have a much stronger intention about what they're looking for, if it's a new job or if it's to understand the other companies that are really surging and growing. And so our advice to a lot of our customers continues to be maintain a level of consistency in your social, regardless of the scenarios you may find yourself in that we'll talk through momentarily. just to maintain that strong relationship that you've built so long to create with your candidates and your social followers, and to help avoid creating a social void that's going to be problematic for you down the line. So that's just some of the trends that we've observed. I'm going to hand things over to Yair, who has some insight on data he's seeing on the outplacement side. So Yair, take it away.
Perfect. Thanks, Mark. And I think that's a perfect segue, right? Because we're seeing the trends on the social recruiting side, and Mark and Jason both emphasize the important point of not having a gap in that communication, right? Not having a gap in that employer brand and keeping that consistent, because there are more job seekers than ever before out there in the market. The macroeconomic data is 36 million jobless claims in the last 2 months, right? That's the obvious thing. We've seen it in the headlines in the Wall Street Journal and New York Times. But what that really means from a CareerArc data perspective is the intensity of that job search for the end user, the intensity of that job search for the laid off employee is actually greater than ever before. And it perfectly aligns with what we saw in the social recruiting data that Mark just presented, with that increase in activity on social, that increase in job clicks. We're seeing the same exact thing on the outplacement side with our outplacement service, right? So we're seeing a 3x year over year increase in usage of our on-demand career coaching service, right? We're seeing a 2x year-over-year increase in resume reviews being requested, right? Double an increase there in resume reviews. And so some individuals, of course, have already been rehired. Mark spoke about various industries and how they're affected by shelter-in-place restrictions. And in some states, those have been lifted, right? You can get your hair cut in some states, but still not here in California, right? And so in some areas, furloughs and layoffs turn into the ability to land your job or get rehired very quickly. But in other sectors, that growth. The takeaway here on the career transition side, tying it in with brand, is that the billions of dollars in government stimulus and payouts, that could be a useful short-term help for someone, right? But at the end of the day, long-term, what everyone wants is that confidence. And that confidence to land a job, and that confidence to be part of the right employer with the right brand. And so we're going to continue to see this activity remain at higher levels than we've ever seen in the past decade, by the natural unemployment rate being where it's at, as Tallulah spoke about in her introduction. So what I'm going to do now is actually shift it over to Jason, shift from a job seeker's perspective, where Mark kind of started us with and I ended us with, and go to the HR leader's mindset and talk through an employer framework and strategies we recommend on 5 key employer categories. So Jason, take it away for the next piece.